It's Tuesday, and you know what that means. Last week in Trading Tips Tuesday, I shared 3 tips that you can follow to add more depth to your day-to-day chart analysis. And during that video, you may remember this part where I briefly mentioned fundamental analysis. The potential setups and then just a bit of fundamentals there. On some days I might elaborate on this a bit more, but for today I've just got everything short because I wanted to do it before this video. In this week's episode, I wanted to elaborate on that and talk a bit more about how I organize my fundamental research. Now, I know fundamental analysis is an area that scares a lot of traders, partly because they don't know where to start and partly because it seems like there's so much to consider and track, so the easier thing to do is just bury your head in the sand and do nothing instead, right? I know you can relate. But here's the thing, fundamental analysis can actually be very manageable. And I personally think it's the more fun and interesting part of trading. Yes, I said it. But to get the most out of it, it's all about how you approach it. So let me share a tip with you that I've used and my team has used to make things much easier. In this video, I'll be using more of a macro view as an example, right? So we'll be focusing on the US economy, just as an example. But you can do the same exact thing for specific industries, commodities, specific companies, and so on. So let me show you more. With fundamental analysis, I think there are 2 main phases. You have the initial analysis phase, which is going to take the most time and effort because that's when you're analyzing everything. And then there's just the ongoing tracking to adjust things here and there and adjust your analysis based on relative changes that have taken place. And I think this is one of the first big misconceptions from people who never do fundamental analysis. They seem to think that you have to analyze absolutely everything every single time. But that's not the case. It's these small incremental changes once you've done the initial bit. So to keep track of everything, we use this document which we call a fundamental overview, imaginative name as always. Now you can do this yourself and it's quite manageable just as an individual, or it's even better if you're working with some friends, other people that are doing trading or investing, or as part of a team, so you can share the workload. It's not one of those things where you need to have one decision maker, it can be very collaborative. Now, there are different broad sections of the document. You can see for this US fundamental overview, we've gone with central bank sentiment, market sentiment, consumer/retail sentiment, industrial sentiment, and company overview. You'll also see that there's a conclusion there, and this is where we'll bring together everything from the document to start to make our own conclusion about where the economy is heading, or what sort of opportunities and threats there are, what sort of value we see there, and so on. And you can see there's also an executive summary, which is on what we call the master sheet. And this is basically a 1-page overview of everything inside the document, the key areas you need to be aware of. So it's not necessarily the conclusion, it's an overview of the different data points and the different analysis that's in there. You may notice that every single paragraph is labeled with a code. For example, in the central bank sentiment section, we have CBS 2.1, CBS 2.2, and so on. This is because each paragraph is summing up one particular point. And by giving each paragraph a code, we can easily reference that paragraph and therefore that specific point if we need to refer to it in the conclusion, in the executive summary, and when something changes. Now, this is really important because if you look at the first page of the document, we have a changes tracker and it shows which paragraph was updated on which date. So imagine that a new economic release happens, something happens at a central bank, you need to update specific paragraphs, you can update those as you go along. NFP comes out on a Friday, okay great, we're going to update the employment situation. And you can treat each paragraph as a mini research project, assign some time to it each week, and then just update that short paragraph. So as a quick overview, if you need to find the link between things or understand a situation, you've got it there and you know you've got the research behind it. So let me walk you through how we go about using this document. Now, I'm not going to tell you how to do fundamental analysis. We'll cover that in a future video and you may have your own way of doing it anyway. I'm just going to give you an idea of how to organize it. So the first thing you need to do is to figure out the key areas for that specific thing that you're analyzing. So this is just like what I showed you before. We had a number of key areas for the US economy. And then you need to set each of those as their own individual research project. Once you've broken this down into the different areas and you've assigned a research project for each of those, you should then know what the most important points are within each of those areas. And in particular, we need to know what the important variables are. In other words, the things that we might need to keep track of, since any changes to those variables will change the overview. For example, with the consumer and retail section, we can see that we have consumer confidence, disposable income, retail sales, and so on. It's all the factors that together are going to allow us to gauge the sentiment of that overall section. And that sentiment will be summarized as an overall statement in the executive summary, as you can see here. So when we have the executive summary, we've summed up all of the points from each of the sections. So as an overview, we can see like a snapshot of all the important things from all the different sections. So the initial setup of the document will take a bit of a long time, maybe like a week or two, depending on how long you spend on it. But once it's set up, you have a very useful resource available to you at any time for whatever you need it for, that only takes a very short amount of time to maintain each week. So the initial workload is worth it. And let's face it, the more prepared you are with your trading and analysis, the better your trading is going to be. So if you can spend a matter of like days working on this initially and then an hour or two each week, it's definitely going to be worth it. So as new economic data is released, or whatever it is that's relevant to the thing you're analysing, you can then go to the relevant part of the document and update that particular area. In most cases, any changes are so incremental and small that it won't even change the points in that specific paragraph, let alone the overall sentiment or the conclusion. However, over time, things will slowly change throughout the document, and you'll be able to start picking up on early warning signs of opportunities or threats that you might not have been able to do by doing the occasional big analysis or big overview. But let's say that I do change some data in a paragraph. I'll then read the paragraph to check that the assumptions or the overall conclusion is still true, then read the overview in the executive summary to check that that's still correct, and then check the overall conclusion just to make sure things haven't changed and to refresh my memory so I constantly know where I stand in terms of the fundamental analysis. Now, if you're just getting started with fundamental analysis, your document can just be very high level to start with. What matters more is that you're constantly updating the document and drawing conclusions from what you have. After a while, you'll soon have a library of various assets or economies that you then just need to tend to each week and can refer to when you need to. You can start building bigger investment ideas or trade ideas from it that will catch you much bigger gains. So just start off that seed, just start to fill in some of the areas and build on it as you learn more, as you improve your analysis, and as you start picking up more opportunities. So there you have it, guys. That's how I think is the best way to organize your fundamental analysis, if you want to do it properly, that is. The document's going to change based on what it is that you're analyzing, like it will be different if it's a company or commodity compared to the US economy, like I was just showing you. And of course it will change depending on what specific analysis methods you're using. So maybe if things are a little bit more based on formulas and calculations, you're going to be doing things very differently to the one I just showed you, which is mainly qualitative based on economic data. Right guys, if you've got any questions about this, leave them in the comment section below. If you're going to be trying this out and using this approach for yourself, do also let me know in the comment section. And if you found this useful or interesting, hit that thumbs up button. And you know what? Make sure you're subscribed to the channel, because in next week's Trading Tips Tuesday, I think I'll throw in a tip to help you get started with learning how to do your own fundamental analysis, even if it's just to support your technical analysis. You don't want to miss it. Thanks for watching. I'll see you in the next one.